Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Ben Green, who's the co-founder of Ready2Retire, and we'll be talking about annuity strategies. Ben, welcome back to the program.
Mike, thank you so much for having me again.
You're welcome. I always love when we can have a follow-up conversation, because if we don't want to get too much into the weeds in one talk, but we want to learn specific nuggets of knowledge. And I know that this one is going to be really powerful because I think people have misconceptions about annuity. So before we dive into that, talk a little bit about what makes your firm different and what kind of clients that you serve.
Yeah, Mike. So we got started back in 2010, really kind of helping folks with health insurance, and then migrated into Medicare, and helping folks with Social Security. And we started getting a lot of questions and referrals from financial advisors, actually, and financial planners, quote unquote, who had lots of questions around what we thought were kind of fundamental parts of retirement. And so we took what we did really well in Insurance Advantage and migrated it over to and added to it an investment piece for Ready2Retire. And so really our clients range in kind of income and asset levels from $50,000 to up to about $50 million. And they're typically, Mike, around 60 to 75 years old. They're either a pre-retiree or they're in retirement, and they want to make sure that all of their bases are covered, not just their old 401k or their 457 products are covered. So we provide holistic, comprehensive planning. We have basically a 12-point tool that we walk through, a 12-point checklist we walk through, Mike, to make sure that people have their entire retirement plan put together, and that they're not just focused on their mutual funds or their IRA.
I like how you lay out that transition. You were serving clients in one specific area, insurance, and all the things that go into that. And then you started noticing that there were other needs, and that's where, are you ready to retire? And that's where your ready to retire concept came in. I think probably you started noticing indicators and noticing clients saying and experiencing and struggling with the same kinds of things. So what are some of the issues that you were noticing that retirees should be aware of when they start now dialing in, preparing to retire?
So, Mike, the fundamental issue with a lot of retirees, and this is simply because of all the advertisements people have seen and all the rhetoric they've seen, is that most people think that your 401k, your 457, your 403b, your TSP is a financial plan. Okay. And we have to tell people all the time, and we really kind of drive this into folks' heads until they really get it. The 457, your 401k, your TSP, those are retirement products. Those are financial products, just like a CD, a bank CD is, just like a money market account is, just like an annuity is, just like a life insurance policy is. And so we take a look at the entire spectrum of financial products that are available and see what is appropriate for you at your age level, given your time in the market, if you will, that you still have, given your job and maybe your current income, given potentially your estate planning needs, your required minimum distribution needs. If you're 73 or above, now we take a look at Medicare, we take a look at Social Security, we take a look at taxes, and so as I said, we take a look at the entire pizza, if you will, or pie, and not just a slice or two of that retirement pie.
As you were describing that, I thought of, I'm always a big analogy person, and I think a lot of guys and men are, but I don't play golf, but I do play mini golf. But it made me think about a caddy carrying around, like on the PGA Tour, here's this whole, amount of golf clubs. Now, when you approach hole number whatever, and what's the weather and the wind and the conditions and how far away, that all means you take that into consideration, and that means I must select this club over this club. And that's exactly what you just described that you're doing with your clients. It's not the same cookie cutter, here's this club to use for every single swing of every single hole. You've got to assess, How much time do you have before retirement? What is your age? What's your risk tolerance? All of those things. So I think that is such a big way that you describe that. It makes so much sense.
Yeah, absolutely, Mike. And the our logo is basically a mountain, sort of like Mount Everest. And what we tell folks all the time is that as you're working in your working years, you're 40 or 50, even your early 60 years old, and you're accumulating assets. That's part of sort of the accumulation phase as you come up the mountain and overcome some struggles. But on Mount Everest, the 55% of the deaths on Mount Everest are from folks that have already reached that peak and then they're coming down the mountain. And so at Ready to Retire, we get people ready to retire, and then we also specialize in wealth preservation. So we are wealth preservation specialists after we have gotten you to that certain level, and we make sure that that folks have peace and they have really kind of a calm period in retirement, and they're ready for all the storms that may come.
And with all of the financial tools out there, why is an annuity a really good potential piece of the retirement puzzle?
Yeah, Mike, that's a great fundamental question, and that's we really spent a lot of time getting educated on annuities, and what we found is that about 85 to 90% of financial advisors, quote unquote, are not actually licensed because they're not licensed in insurance to be able to offer fixed or multi-year guaranteed annuities. They can only offer what are called variable annuities. And so when you go to a lot of these advisors and financial planning shops, quote unquote, that are right around the corner that you've heard of, sort of like Walmart or a McDonald's in terms of their offerings, the only thing they can offer you are certain pieces of the pie. They cannot offer you the entire pie like we can with our wealth management team and insurance side. So annuities are really important now, and they're quickly, Mike, becoming really a bond replacement option because of the fact that bonds have been getting hammered, especially in the last 2 years. And everyone who's an investor and certainly who owns bonds or bond mutual funds certainly understands that.
Mm. That's a really, really good point. And it makes me think of the fact that there's certain times of year, not necessarily the times of year, but depending on what the market is doing, you're going to select a certain financial tool. So if the inflation is high, maybe this kind of a product is going to be better than another kind of a product. So right now, at the time we're talking in mid to 2023, what is attractive about annuities now?
Yeah, so a lot of the utilizers or the proper clients for annuities are folks that are either pre-retirees, right? They're about 5 years from retirement, or they're currently in retirement, and so they're transitioning from the growth phase of their life and their career over to the preservation, really the income phase of their retirement. And we always say, income, or really, cash flow is the king, right? So now that we have fixed rates, Mike, because of the Fed has been raising rates, for the last 2 years. We have fixed rates that are guaranteed, that are short-term and long-term rates that are available with annuities and CDs that are 4.5% or higher. And the stock market, as you all know, it was up pretty high in 2020, kind of late 2021 and 2022, and then it dropped all the way down in 2022. A lot of folks who are listening to this, they lost 20 or 25% of their portfolio, and we're now back up to kind of a 2-year high. So really, in the last 2 years, the stock market has, for a lot of folks, returned 0%. And so we may be in another situation like we were in 2000 to 2013, where the market went down, it came up, it went down, came up. And over that 13-year period, the average person earned 0% for 13 years, Mike. So, and as you know, we're really facing a lot of headwinds now. The U.S. debt is out of control. In fact, just got downgraded a couple of weeks ago. The 10 largest banks just got downgraded by Standard & Poor's with their debt outlook. Customer debt is at one of its highest levels. Really just hit over $1 trillion this weekend, apparently. You have commercial real estate, which is a lot of that. You already have bankruptcies and defaults coming with that, but a lot of that's coming due in the next few months. You have the stock market is at kind of all-time high valuations when you look at the price to earnings ratio, and the Warren Buffett indicator is also all-time highs. And so if you're a pre-retiree, or if you're where you do not really have that time, or if you're not working now, you're retired, and you don't have that income coming in to buffer you, then you really have to consider capturing some of the gains, or lots of the gains that you've enjoyed in the last 10 years, and making sure that you can live to fight another day, and you can live off of that income that you're going to be really counting on. And so
You can
annuities
never go wrong being safe.
That's right. You can never
You
go
know,
wrong being safe.
I mean, you hear some people that are like, oh, over the last 20 years, the stock market has returned, whatever the number. Let's just pick the number, 8%. That might be the case when you do this average, but if you took a look at the chart and it's dramatically up and then dramatically, down in the valley, it's like, man, can you stomach that volatility? And yes, while the average might be that whatever palatable number, man, can you weather those really deep valleys? So I think that there's so many people that just go, done with that, done with the gut wrenching worry, sleepless nights. I don't want to watch the news. Give me some safety. So I know annuities sometimes have some misconceptions, but they're not new. They've been around for a long time. How long have they been around? And kind of give us a little bit of a thumbnail sketch of a definition. What actually is an annuity?
Absolutely. So annuities are long-standing financial products, a whole lot longer. I believe the 401ks were invented in 1974. Okay, as an example, annuities have been around in total for about 2,000 years, Mike.
Wow.
But for a lot of folks, the most popular annuity is one you and I and tens of millions of other Americans really contribute to every year through FICA taxes and Social Security taxes. We pay our premiums for 30 or 40 or 50 years, and then we hope that we will receive our Social Security payments because Social Security is probably the most popular annuity that's out there, if you will, where it's a guaranteed income stream for life, and really that is what annuities that's what annuities do. But annuities are really life insurance based retirement products that can create a stream of income in retirement, kind of like a pension, and it's a contract with a life insurance company for which you pay a premium, just like you do for health insurance premiums, to either receive regular payments over a certain time frame, which can be the rest of your life, or there are a lot of annuities where you put down a premium. It's held for 3 or 5 or 7 years. You earn interest over that period of time, and then you get all that principal back plus the interest. And so there's several different types if you want me to kind of get into those.
Yeah, with the way you described that was safety, security, and now there's different types. And you mentioned that some of the big box kind of providers out there, they're limited to only one type, like the variable. Well, what are someone like yourself, like independent financial professionals? What are some of those other alternatives that if someone hears, okay, annuity, that's a good safe potential choice for me? What are some of those types that I can consider?
Absolutely. So on a fundamental level, you have the deferred annuities versus immediate annuities, Mike. So with deferred annuities, you put down a premium, kind of typically a single premium, let's say $100,000, and the life insurance company, they're going to hold it for a 3 or 5 or 7 year period, and you're going to have interest credited to your account every year, and that interest it's all tax deferred actually. And so, for example, if you're taking that money from a 401k or a TSP or a 403b, for example, you transfer that over tax-free, if you do it properly through someone who knows what they're doing, to an IRA in an annuity. And so that's a tax-free exchange there that you have. And then the annuity company will hold that money. It grows, it's credited to your account, and you do not have to pay any taxes during that period of time, unless you have to pull out, required minimum distributions, which we help folks with. When it comes to immediate annuities, that is when someone wants to turn over $100,000 to the life insurance company, and they want to immediately, really the next month, start receiving payments. And a lot of times you can do those payments for 10 years or 20 years, or you can receive those payments for life. And then with the deferred annuities, with those immediate annuities, we also call them income annuities, and that's where some of the confusion can come into play sometimes. But with deferred annuities, there are really three types, Mike. And the first type is called a multi-year guaranteed annuity. And it's essentially like a CD, but with a life insurance company who, quite frankly, has a lot more cash and cash equivalents on hand a lot of times in most of the national banks that you're familiar with. And MIGAs, or multi-year guaranteed annuities, they pay you just a fixed, really they're straightforward, simple products that pay you a fixed interest rate every year. So whether it's 3, 5, 7, or even 10 years, they pay you a fixed interest rate based on the amount you put in. And when it matures, you get that principal back plus all the interest as well. With the fixed index annuity is essentially, it's a type of annuity that's designed to provide investors with a return on their investment that is linked to the performance of a specific index. So the most popular kind of link is with the S&P 500 index, but there are probably 100 different indexes, Mike. And these FIAs, or these fixed index annuities, that can allow investors to participate in the potential upside of the market without exposing themselves to the market risk and all the potential calamities that can happen over the next couple of years. Obviously,
like losses from volatility. Yeah,
that's right. So it eliminates that downside volatility, as do the multi-year guaranteed annuities, because they're just simply, your principal is guaranteed based on the strength of that life insurance company. We only utilize A-rated companies, and that principal is guaranteed. Your interest is going to be coming in guaranteed. And with those fixed index annuities as well, you have eliminated that downside risk, and you have the opportunity to earn a return with the indexes that it's linked to.
So there's just one choice, and it's really easy to understand the choices, right? So, but I say that in jest because I think that so many times people go, "Oh, I heard this on the radio, the TV. I'm going to Google this, click, set it up, goodbye." It's not a one size fits all. If an annuity is a good choice in your retirement puzzle, let's see what all of these options could be, and let's talk to someone that can assess. And so, like, who are annuities for? I mean, is it for someone that is fresh out of college, or someone that is in their 80s or 90s? So, who typically of your clients, what type of people are choosing annuities?
Yeah, that's a great question. And before I get into that, I do want to talk a little bit about the last annuity, which is, quite frankly, the one that we're coming across. A lot of folks they've been selected into this annuity really without understanding the fact that there were two other types that were available, and that's what's called a variable annuity, Mike. And that is the one that only securities licensed folks can offer, whereas they cannot offer the fixed index annuities and the multi-year guaranteed annuities. And variable annuities are the ones that get so much negative advertisement, if you will, because when you call them variable, that's exactly what they are. The investment can go down and it can go up, but we've seen them where they can, they've gone, down 15 or 20%. And variable annuities typically also come with fees. The average fee is between 2 and 2.5% per year. Multi-year guaranteed annuities are 0% fee because it's like a CD. It's just, you put your money in, they give you interest. Fixed index annuities, they can come with some fees if you add an income rider, for example, or other bells and whistles. We typically only recommend those with 0% fees, Mike. And so literally the first two annuities I talked about, the multi-year guaranteed ones and the fixed index ones, do not come with fees with our firm. Okay, we do not work with fees.
That's good.
Variable annuities, absolutely. Variable annuities, on the other hand, can come with lots of different fees. You can lose a whole bunch of money. And we, quite frankly, a lot of times do not understand why other advisors have put folks into these into variable annuities, except for some other reasons other than the best interest of the clients. And so did want the public to know about those types of annuities, because those are the types of annuities that can go really wrong and cause a lot of issues with clients. Now, in terms of who we work with, And in terms of who annuities are good for, typically someone, if they're 60 years or older, they're within a 5-year period of retirement, they should absolutely consider annuities as a part of their retirement solution. Just like they maybe have some money in a 401k, they may consider converting their 401k to a Roth IRA, for example. That's another great solution. They may be looking at CDs, especially now because of the way the interest rates are set up. They may still consider some municipal bonds, although Treasury outflows, just look at this, are at a record high, actually, very recently, Mike. And then annuities, these multi-year guaranteed annuities and fixed index annuities can be a fantastic solution in addition to the kind of the rest of the portfolio mix for folks. And we work with the folks that are pre-retirees, certainly people that are retirees and they do not want to see 10% or 20% of their overall portfolio evaporate overnight. We work with them. And then even folks who are young, like athletes, for example. Allen Iverson famously utilized annuities and is still receiving payments from annuities about 10 years after he stopped playing basketball, because someone was smart enough to set that money aside in this, in this fixed opportunity for him where he gets income payments for life. And so there are actually a lot of different applications for annuities, and the clientele can range a tremendous amount.
Yeah. And again, it all depends on your need, your runway to retirement, all of that. And so let's wrap up, Ben, with kind of a bookend question, which is, if all of this sounds good and it fits your retirement need, how do you purchase annuities? And then what happens when they end at the very last part? I mean, do they just go on forever, or is there like an expiration? What is kind of like how do you get them? And then what do you do when the benefit is run out, if that ever is the case?
Yeah, those are great questions, Mike. So when you're thinking about purchasing annuities, we always recommend that you speak with an independent broker, okay, an independent life insurance broker that has access to hundreds of different annuities, like we do at Ready2Retire. We always recommend that folks, you look at A-rated companies. We typically don't even look at A- rated companies, Mike, especially because of all the economic calamities that are potentially on the horizon. So we look at A-rated companies. We ask folks to send over their latest tax returns. We can take a look at potential tax consequences if we're working with kind of non-qualified money. If we're working with qualified money like 401ks and TSPs and so forth, there are no tax consequences typically for that. We take a look at annuities that are going to provide some liquidity, okay, so that you can withdraw at least 10% of your money per year if you need access to it during that 3 or 5 or 7 year period. And then we also take a look at annuities that do not have any fees. And so, as I said, we really recommend that folks contact folks like our firm that has that expertise. They have the knowledge around which annuities to take a look at, and we have access to dozens of annuities and really hundreds of annuity companies, Mike.
I think that makes such perfect sense, because it's not for everyone, but if it is for you, let's get with someone who can give you the best advice and the most flexible advice, and not be roped into, we can only offer this one and this one. So someone that's an independent that has your best interest in mind. I think that is so powerful, Ben. You've been really helpful in helping us explain these intricacies of annuities. If someone is interested in learning more and reaching out and connecting with you, what's the best way that they can do that?
Absolutely. And I did want to touch on what happens, once annuities do end, so you can roll those funds over, back to another IRA, which we help a lot of clients out with. You can annuitize the contract and annuitize that $100,000 plus the interest, turn it into that income stream. You can renew the contract with that company for another year, typically. Or there are lots of different options that we help our clients with. And so if folks want to reach out to us, they can certainly go to our website at ready2retire.net. That's ready, the number 2retire.net, and they can schedule a complimentary consultation with us. or they can email me at benjamin@ready2retire.net. And those are probably the easiest ways, Mike, to get in contact with us.
Perfect. Well, Ben, thank you so much for coming back on. It's been a real pleasure talking with you today.
Thank you.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.